Welcome to episode 8 of Coffee with the Johns. We are live from Las Vegas. No? Okay. We're live from San Antonio. Today, we have a lot going on. We have some crazy news about delinquencies, and Texas is actually on the docket for a lot of delinquencies. We have some more news about OpenDoor, malls that are being shut down, turned into warehouses, PPP Forgiveness loans and what's going on with that. More jobless claims. The job market is kind of slowing down. We have news about Disney layoffs, stimulus package, COVID, what a surprise, and more of the vaccine and what's going on with that. Some news about Zoom. Mr. Joe Rogan is kind of killing it in the game. So, we got a lot going on today. So, thank you all for joining us. I am your host, John Barbera. And with me, as always, our co-host, Mr. John Barr.
What's up?
How's it going, sir?
Good. Coffee's kicking in.
That WhatsApp hasn't. Remember that shit? Oh, man.
I watched something the other day on I don't remember, it was something. Oh, it was I popped on something on Netflix and they did like a little skit about a guy because it goes WhatsApp. Dude, that was so 10 years ago. Like,
yeah. But well, we were actually with Val. We were just cracking up because she was watching. I don't know. It was a performer or something, and that performer comes up. And I'm like, damn, she looks old. She's like, well, yeah, she's got to be 50. I was like, shit, she got old. And then I was like, wait, that means that we got old.
That's every day. Like, I'm old.
I was like, yeah, they don't age on their own. We age too. I was like, oh, turn that off.
I don't want to see the truth.
No. So thank you all for joining us. The point of this podcast, of this episode, is like we said, we cover the morning. We cover all the headlines, trending news, things are affecting the market, and we try to put a lighter spin or more make it relatable to you, where it's not just about doom and gloom, but kind of how you can prosper and benefit from it. So make sure, if you haven't already, subscribe so you don't miss any of the future ones that we have. And we have everything archived on the channel. So if you did miss anything, go back and check them out. We put links to all of the articles, everything that we're talking about. We put them below right after we go live. So if you wanted to see any of last week's links, make sure you just check out last week's episode. So on this week, I wanted to, man, one of these days I'm going to get the sound effects going.
What do you need that for? You got me over here.
Yeah, right?
I just can't do
the So, I wanted to actually start off with San Antonio. So, we have this article, right? Streaming stop.
Yeah, it just says loading.
Okay. I guess we're back again. That was weird. I swear, we weren't talking about COVID, Apple. You don't have to be freaking out.
Oh, yep, we're good.
Yeah, that was weird. But anyway, picking up where we left off. Houston, San Antonio, Fort Worth, and Austin is actually a further down. So when you go onto this article, when you check it out for yourselves, if you click down here on spreadsheet, you'll be able to actually see all the metros. But this is crazy. Like what they were talking about in the article and all the stuff. I'm pretty much going to give you the whole summary of the article, but they're talking about 10 metros in 7 states present especially large risks due to a combination of the large FHA portfolio containing a high percentage of delinquent loans. These are loans that are greater than 70%, or seriously delinquent loans greater than 10%. These percentages include loans in forbearance, and FHA shares all of the purchase loans in 2019. So, oh, nice. We good morning, Capital Asset, Kim, and Stone. Mr. Stone, welcome back to the show. So, it's crazy, right? Like, you're seeing all these delinquencies, but what I liked actually is they kind of give you a little tip on marketing. it would be expected that these delinquency percentages will increase over time. At some point, a significant percentage of the then delinquent loans would be expected to be placed on the market by owners under duress or distress. There we go. Distress sounds better than duress, right? They're not under duress.
Just a little bit. Just a little bit.
A little dyslexic. And they're going to become foreclosures and then enter the market. It is at this point we would expect buyers market to develop in zip codes with heavy exposure to FHA and other high-risk lending combined with high levels of delinquency. So they're already telling you zip codes with high FHA loans. So if you pay attention to your market, as you should be, or you watch the market update that John puts together, you're going to know.
It's a good topic to add to our market update.
Yeah, you're going to know what.
I do by zip codes, but I don't do by the type of lending in those zip codes. So it'd be a pretty easy little tweak to do.
Mm-hmm. And find which zip codes are heavily on FHA. I mean, I don't know. Should we put that out to everybody or keep that to ourselves?
Next topic.
Yeah, of course, we'll put it out. Homeowners in these zip codes will predominantly be low income. The zip codes will be at about 50 to 90% of area medium income. So those are all stats that you need to be pulling yourself. You need to understand where, and we pull these stats from citydata.org or something like that. You can Google it, and they'll provide you with a lot of these stats of the medium income. And it says, and contain high percentages of households of color. So look for colorful houses. Or not colorful houses. So pretty much minorities. And bad joke. They're pretty much saying minorities, low income areas. Those are the ones that are going to be hit the hardest. What I was more wanted to talk about with all this, they're giving you some great areas to market, but these distressed homeowners are going to be dumping their properties, or going to be forced to dump their properties, right, onto the market so they don't get foreclosed on, and they're going to have to dump them at a discounted price. Wouldn't that affect the pricing at this point? Like, we've seen the pricing of housing just keep going up and up and up.
Well, it depends, because like right now we're in a massive seller's market, to where if you still have that massive seller's market and you have a continued influx of people, they can put their house on the market and they sell like that.
Right.
Because like even right now, if you add an extra 500 houses to the monthly inventory, we're still below where we were last year. So I think it goes into this thing that we're saying, like where the economy is having a kind of a K-shaped recovery,
right? To
where like your lower middle class people are the ones that this is really affecting the most. Like one of our topics we're talking about is the WHO saying that shutdowns are bad, and it's one thing.
Stay on task.
It is, but that's one of the things they talk about. That is like it increases poverty levels, because the people that get laid off are these people that are talking about in this article, and this what the stats they put up. I was kind of shocked that it was only 20% of San Antonio lending is FHA. I was like, I don't know. I feel like out of the houses we've sold over the years, like 80% of them have been FHA, especially in that sub 200,000 price point, because that's your new entry level price point. So that is something to where it all depends. Like, yes, it is going to have an effect, and you would see an effect in the housing, but as long as it doesn't overwhelm the housing market with a flood of them, and they're only saying 20% of the houses and what's delinquent. So it could not, as long as you have continued people to move into Texas, into San Antonio to buy up that inventory. And the part where it could hurt them is if they don't have the equity to sell. Because a lot of FHAs, it takes, you got to get at least $10,000, $20,000 of appreciation just to cover your closing costs. But if you bought your house 2 years ago and you need to sell this thing for $200, you bought it for $180, in 2 years, you might not have got that appreciation, to where now you're really stuck in that thing. Because now even for a creative real estate investor, we can't even go and do a sub 2 on that, because if they put so little money down, it's like, I can't buy the house because there's no cash flow. It's underwater. So you're going to have short sales and foreclosures rise out of that.
Well, that's still creative real estate, right? That we've learned about and we've stayed educated on doing processing short sales, The biggest thing for us has been, though, instead of us doing the short sales, which is a damn process, we find great companies that do them. We send it to them, and when the short sale has been approved, we submit our offer. But in that's kind of what I see. But what I'm more leaning towards is they're talking about lower income more than anything, because that you say low to medium income. What's medium income anymore? Like I'm seeing a larger gap the more this keeps going, because the people that have been affected are the people that work in the service industries, right? Your waiters, bartenders, your people that work in the retail space, as whatever the people do in the retail space.
So close.
No, I mean like they hang in the clothes or whatever the hell they do. But a lower income and all that has been pretty much wiped away.
Yeah.
So is this going to create a bigger gap? Like, what's going to happen with these people? So these people are not getting paid, right? It's very hard for them to get jobs because they're all competing essentially for the same jobs. They don't really have much skills in any other area. Mm-hmm. And then you have, what do you call this? The stimulus packages and all the games that the politicians are playing. So the free money is not coming out and keeping the whole thing going. Bills are still piling up and stacking up. Like, what's the option for these people? How's that gap gonna look?
I have no idea, and that's the age-old question, and that's where a lot of this election is circling around, is like the wage gap as it's continuing to grow, and that's where like these stimulus packages they're putting out, bailing out companies that shouldn't be bailed out. It's like that's gonna make the problem worse. And I think that's one of the things where they did differently with this last stimulus. Like, okay, we'll increase unemployment insurance and we'll do the stimulus checks to people that made less than $100,000 combined household income. It's like, okay, now you're getting money to the people that actually need it, not bailing out banks and airlines and these big conglomerates that have high paid employees, to where like that just increases the stock market and people with assets go up. But these people that are being affected, they don't have assets. Their only asset is their house, and now their house is being taken from them because now they can't work. They're seriously delinquent, and they can't even sell it to get what little equity they've gained.
Well, you know what's interesting about that is I forgot to add the article, but I'll add the link after this goes live. Kim, if you're listening, remind me to add the link. But I was reading an article how, going back to the gap, is you have your high medium income to high income earners, second homes, all of these are booming right now. Luxury homes are booming.
Your top half of the economy is doing extremely well.
Very, very well, because it's the same thing. It's kind of after the 2008, all these institutions, they all subscribe to the too big to fail model, where they have to bail out the banks, because they tied it to a point where it's like, if they don't bail these people out, then the whole economy crumbles down. Well, it will take a hit. It will take a hit, and it's not good for politicians for that to take a hit.
Yeah.
Right? It's good for so it would suck. It will suck for everybody, but that hit is necessary, like we talked before. You need that level of austerity to kind of wipe out the garbage.
That's the true capitalism. Is like, if you screw your business up and you fail, and you should be allowed to go to business, because what that does is that creates new opportunities and new business models for new people, because those people that were going to that company still want that product. There's still a need for that product. Like, if half the airlines disappear, people still want to fly everywhere, so that's going to jack prices up, and then that's going to create an ability for somebody to come in there and find that new equilibrium to create a new company that isn't bloated with debt and bad corporate governance, and that allows for new entrepreneurs, new business owners to go and create opportunity. But right now, when you have those people getting bailed out, it doesn't allow that. So now the entrepreneur that's trying to work and grow up there and like trying to fight his way to the top, you can't compete with somebody that's got the corporate funding that these companies have. So to try to create a startup becomes harder and harder and harder and harder. But now if that goes away, that creates more margin for people to come in and create new businesses, new opportunities for new people, and new wealth to new generations.
Oh, 100%. I mean,
and it's not just stuck at the top where has been for a while. When they get bailed out, it stays there. It doesn't trickle. They're trickle down economics. Like, doesn't really work the way you sell it.
Well, when they first launched the first PPP and the stimulus and everything, what were all these major companies doing? They were doing stock buybacks. I mean, that should have never been allowed with government money.
Yeah, well, that's the thing with it. The stimulus checks were like under 50,000. It's significantly easier to get that forgiven, but like over 150 grand, where originally it was going to be everyone under 150 grand. Like they're looking more into that, because when you look at the percentages of loans, under 50,000 was the vast majority of quantity of loans, but it was an insignificant amount of total money lent.
Yeah.
And so now they're investigating these big people of like, where did you spend this? Because now you got these people, these dumbass people going on like, oh, look what I did with my PPP loan. I went and bought a Lambo, went and bought a house. Like, how dumb are you that you got to, it's admitting that like I committed fraud, and now I'm going to show off that I committed fraud and how I did it.
Well, it just kind of goes to show how, everybody thought, because this was the word around the streets. When this whole first hit, everybody thought that pretty much that PPP loan was going to be forgiven for everybody, right? Across the board, there was going to be a million ways of giving forgiveness.
Yeah, it was really like anyone under 150 grand was going to be forgiven.
Right, but one thing that we understood and what we were paying attention to, it's like, yeah, you probably shouldn't treat it that way, though, because guess what? They've changed their mind in the past. You can't bet on that shit. So, and that's exactly what happened. I mean, now they're dropping in. We're going to cover that, but they're dropping it to 50 grand, underneath 50 grand. But then you still have all these massive companies that took out billions of dollars, or hundreds of millions, and then did stock buybacks at the beginning. It's like you should have been penalized for that shit, because the money was meant for employees. You know what I mean? So you to keep people employed. Now they're running out of money again.
Well, I don't think a lot did stock buybacks with it. The stock buybacks was
like
at
the beginning.
Well, that's before the COVID thing. That's when a lot of they're becoming under scrutiny. But it's also like, if you don't do the stock buybacks and you mismanage your money, you risk corporate takeovers. So you kind of have to treat that cash, because it's just the way the economy's developed and like moved into. I was thinking about this the other day, to where like they kind of have to return the money to the shareholders. They have to do stock buybacks, because like that is because they can't find a place to put that capital. So they're kind of incentivized, because if you leave too much cash in your balance sheet, it shows that you're mismanaging your company and your ability to open yourself to corporate scrutiny. So they almost kind of have to do this stuff, because nobody anticipated a COVID situation going on to keep that kind of cash heavy.
Isn't that the problem?
You're not incentivized to keep that kind of money, and everyone's like, well, why are you having to lay off all these people? You were doing all these corporate buybacks and shareholder distributions and things like that. It's like, well, you kind of had to, because that's the corporate culture. You have to do that. But now it's like
their culture.
And now you have this issue of, well, they ran out of cash. They couldn't float their employees for 6 months. And then the government comes and has to bail them out. It's like, well, that just reinforces that behavior.
Oh, yeah, exactly.
So it's just like, God, you just, at some point, the austerity you talk about, like, you just kind of have to let them work through it. Like, let it go through the economy. Is it going to suck? Yes, it is going to suck.
Yeah, it's going to hurt.
It for sure is going to hurt. But you kind of need to. Like, you got to let this stuff move through the economy.
Well, and that's kind of what they definitely don't want to do. I mean, we've already seen it. The Democrats, that's pretty much been their whole thing since the beginning, is, pushing the country more towards the socialism route. And they've come out and said it. Oh, they rebranded to democratic socialism, because that's different for whatever reason. But then you have the Republicans that have switched over to crony capitalism. So Republicans used to be known for more being conservative and being capitalist, where now they're not. I mean, look at Trump. Trump is just now, one of the biggest business owners, and he's all free money, free everything. So it's like you have two sides of the same coin, damn near. You know what I mean? And it's really sick. And I mean, going off to the next topic, you can see here, OpenDoor discloses that it's under federal investigation. Not a surprise. But what's more interesting is that little sub-headline is they also reported $118 million in net loss in the first half of 2020. Damn. Like, I mean, you and I know this, right? We've been saying pretty much that from OpenDoor for quite a while, that we were shocked that a business like this, but that's what they do. They keep raising more money, flooding floating their business pretty much with more money, more rounds of funding and all that because their business model doesn't make money.
Yeah.
And here you see it, how they lost $118 million in the first half. Holy crap.
Well, I mean, that was the thing I thought about, like when Tesla was growing, it's like they lost $1 billion in 2018. That's just, I just made that number up, but it was something like hundreds of millions of dollars in 1 year. Like, how does a company grow? Yeah. Or like people keep funding something that loses that much money? And something on the iBuyer model that to me is just like, you're holding real physical assets to where you are so lucky that this economy didn't go the other direction with the housing. Where like if you own 400 houses, not 400, but say they own 100 houses in San Antonio, we have high taxes, high holding costs. Yeah. They're buying these things cash, leverage, however they're doing it. But then all of a sudden, like the market went the other direction. Now it's taking 4 months to sell a house versus 2 weeks. Like that significantly burdens their. And you can
tell that their level of speculation where real estate, and at least if they've been investing correctly, which obviously they haven't, but in the majority of the best metros in the country, real estate has been going up.
Yeah.
And especially during the first half of the year. And yet you've lost $118 million already. I mean,
well, what they're trying to do is they're trying to and I think this is like kind of how these startups do this, especially that's why I see a lot of them located on the West Coast or East and West Coast, because there's so much money over here to fund these losses. Yeah. Because what they're doing is they're trying to force the market to change via monetary power. Yeah. That it's like we're going to ingrain and change the psyche of the consumer by putting so much money out there and losing so much money that eventually they carve a 10% market share or 5% market share. And then just like what they're trying to do, they offer title insurance, escrow, home loans, realty services. They're trying to streamline and create a vertical economy scale where they take a little piece all the way along it and they create just enough of a margin to eke out a profit. But as long as they keep growing and show that their numbers are going, like, they can continue to raise money because the thing is, like, eventually they will go public. But
and it's really that they're trying to. All they need to do is raise enough money to keep them alive long enough for their concept to grab.
Well, that's where that's where you look at, and then to offload the risk into the public markets.
Yeah.
Uber, Lyft, prime example, is that they grew and grew and grew, and those early people made tons of money, and then all of a sudden it went public at billions of dollars. That now these guys that took the risk up front, they can offload that risk onto your average everyday investor, your big pension funds and things that can buy those stocks that originally couldn't get in at the very beginning. So that's the risk to it, and that's their business model. But I mean, you kind of think about it, I just thought of this, like, in a way, it's letting companies like this run these losses and eventually fail. It is a way of redistributing wealth because they do have to buy these houses from somebody. They do have to hire somebody to do a lot of this stuff. And we know somebody that works at one of these companies, and they're like, it's a giant shit show working for there because it is just all over the place trying to throw together last minute. And somebody is getting paid to work for these companies to where, I mean, and then the people that are funding in these massive losses are your big venture capital funds in the West Coast, so that money is kind of getting pulled away and redistributed to other areas. It was just
it's a very interesting business model, but my issue with it is that the owners essentially take almost no risk, right? Because they keep borrowing the money. It's all the investors are dumping in all this money. It's a tech company, so at the end of the day, it's like, well, your money's at risk, so it's almost like a game. So then they employ all these people. They do all these things. And then what happens if they do go out of business? Now, all the properties they purchased need to be liquidated at a discount. So that does affect the market.
Yeah.
While it helps people right now, if their business model doesn't hold up and people don't keep drinking the Kool-Aid, what's going to happen to all that property? What's going to happen to all those employees, all those people, right? Well, so because it's being built on a house of cards damn near.
Who was it when the crowdfunding thing came very popular 2 years ago? Realty shares was a big one, and there was another one that they're raising money from individuals to go do crowdfunding investments and things like that, and then they went bust.
Yeah.
Like, well, I bought into this commercial property in Idaho, in Boise, Idaho. Like, what happened to my money now? Like, who takes that over? And like, some venture capital came in and bought the thing at a sub-level price and is now, so it can hurt. Yeah. But I see these iBuyers being kind of like that. Is that, especially like OpenDoor, because they don't have a profitable business. Now you have people like Zillow getting into it. It's like, they are a publicly traded company that is profitable.
Yeah.
So they have the ability to...
Well, they had a different foundation that was already...
Yeah, they have a good foundation. Now they're branching off into something else. And where it might be, they're trying to perfect the model to where when OpenDoor goes out, they can just say, all right, we'll come buy in your assets at 50 cents on the dollar, and we'll acquire that piece and add it to our business. And because now they have the profit to sustain those losses, not just raise capital.
You know,
and hope they...
A smaller example of that is actually all the people that we've been seeing popping up with virtually no experience doing syndications for apartment units and apartment buildings.
That's a good one.
Right? And I've seen some of their stuff. They send us their pro formas and, you know, their projections trying to raise funds. And I'm looking at their numbers and they're so optimistic. With all the returns.
Well, it goes to what we were talking about last month or last week, like the interest rates.
Yeah.
It's like because of falling interest rates, these assets are going up. It's not because they're creating more value.
Exactly.
It's like, no, because of the lower interest rates, the money's gotten cheaper and that's pushed up the value. Mm-hmm. Like, it's not that you've done a true... I mean, some people do. I mean, they do go in and improve them and charge more rent because they are providing more services. But a lot of that is combined with super low interest rates, to where if once that music quits turning, like, and you have to be forced to actually create real value, not just funny money of just lowering interest rates, like, yeah, you got a real problem. Because a lot of these people, they do it. They buy them for 2-3 years, they do some value add to it, and they offload it to the next person.
Yeah. And
they come in with a new loan to do it. And just for the fact that we have a super competitive market for those kind of assets and extremely low interest rates, like, it's bidding prices up. So,
and I mean, I guess what kind of sucks about this whole thing is that we know the inner workings of a lot of these people because we know who these people are that are syndicating. And it's like, they've struggled in one industry. Now they're branching off into another industry because it's easy to raise money and it's easy to sell. And I'm like, oh my God, I one way I kind of hope for the best for them, because if not, so many people are getting screwed. But in another way, it's like, you're gambling.
Yeah,
like, you haven't even taken the time to even educate yourself. I was speaking to another investor recently where he wants to get into apartment buildings. But like he says, he's like, I would love to get into syndicating, but I want to make sure I syndicate after I've invested my own money, bought, you know, a 20, 30, 50 unit apartment building with my own money, managed it, understood the inner workings, and understood what everything is. Then I will go ahead and syndicate. And I'm like, see, that, to me, this is all opinion, right?
Yeah.
To me, that's the proper way of growing a business. Not, hey, you know, I attended a weekend seminar. I found out how to syndicate. Let's go do this and start syndicating for these apartments because they're all over the place. It's like,
well, I mean, I think it's the nature of the industry of risk takers. I mean, obviously, they have some knowledge. You have somebody wanting to put capital up, and they're going to take a risk.
Yeah.
Hope for the best, obviously, that it does work out. But it's like, somebody's got to start somewhere with it, because like, you can't just go work for one of these massive companies to syndicate these things very easily and then branch off to go do it yourself. Like, it is very difficult because there's no formal education, formal process of how you actually go about doing this.
There is, but there isn't, though, because like how we got started, right? We partnered with the people that knew how to do this shit. So we made sure that, you know, if somebody lent us money, it was being protected by somebody much savvier than us.
Yeah.
You know, so we always made sure that, and we always gave them the lion's share, especially when we were starting off, because it's like, you are taking a bigger risk than we are. You're putting up all the money, right? So we gave them, I think there's a right way of doing it. And I'm not saying don't do it. I'm just saying, I think there's a right way of doing it where you can still learn and still protect these people,
yeah.
You know, but that's the thing is, as I speak to them, they're like, well, you know, they're accredited investors, or they have money. They know what they're doing. And I'm like, well, but you know that you don't know what you're doing. To me, that's That's not right.
Well, I mean, to segue it into the next property, it was like,
No, I'm not segueing.
Segue. Moving on to the next topic, but how to move into it is like, and what happens when these things go bust is like, it's not like a retail house that we can go sell these things to a retail buyer. It's a very liquid market compared to multifamily. When you screw up a multifamily investment, it's not your average person you're going to sell these things to that have an emotional attachment to it. It's like, no, you got to go sell it to another investor who realizes the position you're in, knows what you're in. Like, I'm not going to offer you that. I'm going to offer you X and you want Z. Like, it's like, you want 1.2. I'm going to offer you 900,000.
And that's precisely when people always ask us, why don't you do commercial? It's because residential, single family residential gives you so many outs. Right, you can do owner finance. You can rent it. I mean, you can do so many ways.
Much more, like people say, like real estate's not a liquid market. Well, it's like, when you compare real estate, single family is the most liquid as compared to multifamily, commercial, and multifamily. So it is the most liquid.
And you can sell. You can sell to retail buyers. But when you're in commercial, multifamily, who's your buyer? Another investor.
Yep, and the bigger you get, the more savvy the investors
exactly. Get. So if they know that you're hurting, they're going to be buying it for pennies.
Yeah.
They're not going to offer you retail for it.
Well, the next topic here is like turning dead malls into warehouses will slash the value as much as 90%.
Exactly. I mean, this article, when I came across it, I was like, oh, man. I mean, it makes sense. It's just something that we've never really spent too much time kind of thinking about. But, yeah, I mean, you look at these malls that are having to shut down and been shut down for quite some time. And they're saying, like, you have these analysts that are projecting, like, in the coming years, hundreds of Americans, roughly 1,100 malls are expected to shut. So hundreds of malls are expected to shut down as retail, restaurants, and movie theater closures pile up. And more people favor shopping on the internet over heading to the store, especially with this whole COVID thing, right? It's become a lot harder for people to get out and about. And then they're talking about when mall vacancies levels reach 20%, mall is at risk of it tipping into a default. And you already have some malls starting to file for bankruptcy. So you have this firm predicted 15 to 17% of U.S. malls will need to be redeveloped into other uses long term. Now, what I found interesting about the redevelopment, that they were saying that the problem is as they redevelop, kind of what the headline talks about, is if you change from that retail space, from that, high income, high lease space, now you're slashing the value of the property. Because now you went from leasing, and these are throwing numbers out there, but leasing a storefront for $20,000 a month to now maybe you're leasing, the whole first floor for that price.
Yeah. Well, that's where I saw they're being turned into like distribution centers and stuff for like Amazon and FedEx buying these things up. And it's a prime example of like some people I heard, I think Rick Edelman said, it's like this is the 20th century investments versus the 21st century investments.
Yeah.
And you need to understand where the economy is going and where society is heading to make sure that your money is positioned in a way that you can capitalize off of the 21st century kind of stuff versus the 20th century. Because it is right to where before, like you go 10 years ago, you're like, oh no, I wouldn't buy online. Like, and that's where the problem with it was, like, I want to try it on because then it's such a pain to return. But Amazon has come along and said, return it. We'll cover the costs. Yeah. And I was like, well, FedEx, like you just got to, we'll print the label off. It's paid for. You just got to go drop the thing off to where it's that easy to go and like, all right, I'm going to buy 6 shirts. Cause like we've done it. We were going on a ski trip. But like, I need to get pants that fit. I was like, but I don't have time to go try them on. So bought 6 different pants, sizes and styles, tried the one on that fit and returned the other 5.
Yeah.
And it's like, that's a pretty awesome way to, instead of going to the store, going to multiple places to try on different pants, different prices, different everything. I can see everything online, order it all, and get it returned. Yeah. To where I think a lot of these big retail stores, the only way they're going to survive is they're going to have to do stuff like that, but they don't have the innovation to do it.
So we talked about, we didn't have coffee with the Johns before, but you and I have spoken about this plenty of times in the last couple of years, and all it's been is that COVID sped this up.
Yeah.
COVID has sped up pretty much. Yeah, it is sped up the already dying that these companies were going through. But what was interesting is that we were starting to see before COVID how a lot of these malls were already shifting their models.
Yeah.
They're already starting to add more of you don't go to the mall just for retail. You had more stuff going on.
You had more
in
restaurants.
the mall.
Well, the problem is you had more restaurants, movie theaters, entertainment things showing
Well, anything that
and then
needs
COVID comes along and
of
goes,
people.
whoop, we're just going to wipe that away too. I know you're trying to shift, but just kidding, can't do that. But it does open up. Like, because a lot of these like movie theaters, retails, these people aren't getting bailed out. I mean, AMC, I think one of the big movie theater chains just filed bankruptcy, to where the other ones are saying if we don't get this figured out, we're going to go bankrupt as well by the end of the year if we don't shift these models. And that is going to clear the way for new experiences to kind of come along and new things to fill those voids. To where it's like they're talking only 20% of malls. So like there's still 80% of malls are going to shift the model and go to something else. So it was already the bad performers that were poised for your 20th century style returns, where now they're shifting over to something new where they might come up with a new profit model and become the new thing.
Yeah, but you got to understand that, like, kind of what I see is the same thing that I've been saying since the COVID hit, is that this is having a rippling effect across all these retail industries, right? So while, yes, they're talking about 20%, there's still no end in sight with all this. I mean, this is something that,
maybe.
But it doesn't seem to be an end in sight. This is, even 20% of the malls, that's huge unemployment. Again, the lower income people, you're more, blue collar workers and all of that.
Yep.
They're all being rushed back into the workforce. Everybody's competing after the same. I mean, I remember in 2008 how they were saying in New York, they had like almost 8,000 applications for one janitorial job opening in the city. You know what I mean? Like, that's kind of what you're going to be seeing, that you're going to have a lot of people going after the same jobs because they don't have the qualifications.
The problem is like, no, they have too many qualifications for that job is the problem. Because
then that's on the other side
where like you have 8,000 people that apply for the job, but 7,950 of them they're not going to hire because like you're too qualified. I want to hire somebody that's going to stay in this job. But I don't want to hire somebody that's going to move as soon as a better job comes along. They have the abilities and qualifications to jump.
The issue is that they're too qualified, but in an industry that is not existing right now. So you have people in the event space. You have people. Airline pilots, like, yes, you're a pilot and you are used to making, 6 figures a year. Yet now you probably got it. And what happened in 2008? Pilots were stocking shelves at Home Depot, right? I mean, the majority of the
they get expendable positions that they get an immediate return off of. To where like car salesmen, it's like it's commission based or lower hourly.
Yeah.
To where it's like if you quit tomorrow, I can bring somebody in here in a very relatively short period of time. That company starts seeing a return on their investment on the training it takes. Yeah. But to bring somebody in to entry-level management from a completely separate industry, it's like it takes years to get a return off of that. That usually off the training and the time to get them to start performing to fit into the system. But if they know in 6 months to a year you're going to leave,
some good news is Prime Homes will be looking to buy a plane soon. So any pilots looking for a job, we got some acquisitions jobs opening up.
G6, baby.
Yeah,
G6.
Get a little plane, kind of start globetrotting. But I mean, this is a real issue. This is crazy. For the building owners, it's gonna make sense to redevelop and change what the mall is. The problem is, it's gonna come across where maybe the land is even more expensive, taxes or whatever, than whatever the hell you redevelop to. Mm-hmm. So even the redeveloping options, I mean, you saw the Amazon fulfillment center that we have in San Marcos. They build it way the hell out there in some piece of land because it doesn't matter.
As a field.
Yeah. It just doesn't matter where they build it. It's a distribution center.
Yeah.
Malls are more strategically located within cities, right, where it's more accessible. So that's prime real estate space, and you're probably paying that prime real estate tax for it.
Yep.
So what are you going to redevelop to? That's going to return that income?
They're just going to have to go to the city and just be, or municipalities and just be like,
that hurts the municipalities.
Exactly.
Though.
It's like, you want to own this thing? Is like, or like you're not in the business of owning commercial property. Like there are going to be some negotiations with that. It's like, we need to lower these taxes to a level that is sustainable. And it is in like this thing we said when we started this, the longer this goes on, the more and more problems that are going to rise from it. But I can't remember, just briefly saw it this morning, that one of the vaccines was saying, like, no, we have a really good chance of getting something approved by November. They're applying for emergency approval through the FDA because their trials are becoming successful to where that they can get it out to where like it's a start of moving to restoring confidence and getting things going. Because that is good news, even though a lot of people say, oh my God, I don't want to take vaccines. But now the more they get out there, the more the news shifts their narrative. It will eventually work its way through. But
the thing is that a lot of people are saying that, but when you tell people like, well, you either get a vaccine or you just stay unemployed. I bet you a lot more people are going to be like, you know what? Screw it. I'm taking a vaccine.
Yeah.
You know, how the flu shot and a lot of companies have been and everything. Like, if you don't get the flu shot, you can't go to work.
Well, Biden came out and said, like, I think government should make it mandatory to get a vaccine.
There you go.
It's like, if he becomes president and they make it mandatory, it's like, well, like you talk about, they can't say, okay, we're not going to make it mandatory. You just can't go do anything unless you have the bracelet that says that you got the vaccine. Or you have the scanner or on your app
RDF chip.
Yeah, something.
Now they start chipping us. Where are my aluminum helmets?
Then you have that.
Let's start the conspiracy theories.
Is it RFDI or is it one of those chips or is it one of the things that you can push a button at will and you just fall over?
It could be anything. Who knows? You don't know.
We'll move on. We'll move on from that. This is
it's just jokes, people. Don't freak out. We're joking. But the next point is SBA and the Treasury announced the PPP forgiveness for loans of 50 or less. So, this is interesting. It's good for a lot of small business owners, but one of the biggest things that I found interesting from this article is that SBA has received 96,000 requests, right, for the PPP loan, which represents 2% of all of the PPP loans. So they've gotten 96,000 requests, but they've only lent out to 2% of that. That's insane.
Okay, wait, explain that. So 96,000 requests for what? More money or?
For the PPP loans. For SBA loans. SBA loans.
Huh. I didn't. Those numbers do seem
extremely
shocking.
Not one of the forgiveness applications has been approved yet.
Oh, they weren't taking applications yet. I think it's just now within the last week or two they're saying that, okay, we're going to start accepting applications for forgiveness because they kept changing it. It's like everything under 150 is going to get it. Oh, then we're not going to do that. Now it's down to 50. Oh, we have this long drawn out process of how you get it forgiven. Now it's down to just a one-page application for forgiveness of the 50 grand or less, because that's what I said. Like, basically, if you got something for 50 grand or less and you just fill out this paperwork, they're not even going to check into that or look into it. So
yeah, I mean, it's going to be difficult. It's going to be interesting to see because if those numbers are accurate, of course, this is part of the Washington Journal article too, and if 96,000 requests were sent in and only 2% of the loans were given, that's a lot of businesses. That's a lot of loans that did not receive a loan. You know what I mean? Like, that's insane. That's a crazy amount. What is that going to look like? What is that going to reflect moving forward? You know what I mean? With all these loans. And then you have all these people that are not being forgiven moving forward because they bought the Lamborghinis.
Yeah, right.
And they're going to have to start paying these loans back. What was it, though, the PPP? What was it, like 1%, though, over interest if you had to pay it back?
Yeah, it was like 1% over 2 years if you had to pay it back. So
I mean, it's not insane, but you do have to pay the loan back. So if your business hasn't been profitable, if that PPP loan didn't generate any revenue, any income, and you didn't use it wisely because you were buying, Lamborghinis and going on vacation just to look Instagram famous, like, it's going to be interesting. It's going to be a difficult time for a lot of business owners. So they were saying, I believe part of the article, they were saying, the ultimate success of the program will depend on forgiveness. So small business owners are eager to learn of the decision. I don't know.
Yeah, I'd be curious to look more into that 96,000 because I'm reading it here. The PPP has provided 5.2 million loans worth $525 billion. So what is the 96,000
I don't know.
aspect
Yeah,
portion of it?
I was
of the
looking at it
2%?
and I was like, what does this mean? Or is this like new application process?
And it might be that because I know they're trying to release more money, a second round of it. But that's one of the things that's gridlocked. As I said, they still got $150 billion. Like more people are trying to apply for this, but they can't approve it. They can't release it because the CARES Act ended and the window closed. So they're trying to open up, say, at least let us release this piece of money to these businesses that really need it.
Yeah, because the last time they were allowed to release was the deadline was like August 8th or
something like around the end of July.
So,
August,
and I mean, yeah, in that next headline, what was it?
The jobless claims. That the jobless claims jumped because economists were expecting new jobless claims, people that were applying for the first time, was only going to be 830,000, but it was 898,000. But if you just read that headline that says jobless claims jump hitting highest level since mid-August, you would think like, oh crap, the economy is doing worse. But they actually come out and say is like, well, yes, the numbers are higher on new claims, but the number that really matters is the continued claims, people that are continuing to get unemployment, and what that number month over month, week over week is really representing. Right. And they came in to say that, where was it? Although the absolute levels of claims remains well above the pre-pandemic level, the declining trend of continued claims is more important to watch. Citigroup economist Andrew Hollenhorst said in a note, the decline in claims over the past few weeks, even after netting out those who transferred to federal PEUC, is encouraging point to still robust rehiring in late September and should continue into Q4. So, yes, new claims are coming in at a higher rate, but the overall continued claims is still continuing to fall faster than new claims coming in. So it is showing that the economy is still recovering, but it's kind of the clouds on the horizon kind of thing. It's like, okay, well, I think it's proof that they're saying like another round of this stimulus is needed to curb that slowing. Because yes, we're hiring people back at a faster rate, but we are having some problems where the unemployment is starting to rise, to where if those new claims continue to rise, you will see those continued claims start to follow it and continue to rise back up because businesses aren't hiring that velocity of money, isn't transacting and moving as fast. So that was something that I found interesting to show. Like, hey, numbers are rising, but the continued claims are continuing to fall, and they are expecting it to move into Q4. So,
I mean, that's really the kind of the thing that we've talked about is as much as at the end of the day, these are headlines, right? That's what they're trying to sell with the headlines. That's why you got to read the article. You got to, do your own research and figure this stuff out for yourself, because the one thing I remember talking to a reporter and they were telling me, we write the articles, but somebody else writes the headlines. Yeah. We don't write the headlines. Because it's not about...
Yeah, you have a marketing specialist writing the headline and the journalist writing the article, and they go through and go, yeah, let's pull this piece out. And
the headline could be just such a small piece of the whole overall
article. How
many
times does it piss you off when you look at an article, you're like, oh, that's an interesting headline. Then you read it, you're like, I just wasted 4 minutes of my life reading this article that had nothing to do with the headline. Like, you bastards.
Yeah. But it just goes to show, though, as well, that the economy is still on very shaky ground. I mean, this stuff with the unemployment, with people needing more loans, more PPP, more of the stimulus checks, more unemployment, right? I mean, these are people that you kind of gave them a taste of free money and just staying home and getting paid more than you were making at your job.
Yeah.
And now they're like, oh, that stopped. So you have more people hitting the job market, but then the jobs aren't able to open.
Yeah.
So it's kind of one of those things that I actually forgot I wanted to start off with this. But now that I remember, I was like, I know there was something I wanted to say before. But in San Antonio, you moved my article.
I didn't touch nothing.
You moved it. But, damn it, John, you're fired.
What article? I didn't touch any of them.
You're fired.
Did you forget to put the article in here?
No. I don't forget anything. I have an amazing memory.
Do you know?
Yeah, I think so. But anyway, the article was pretty much bars are opening back up in San Antonio, right? Big celebration for a lot of people that I know.
Woo!
Big deal for a lot of people. But it was interesting reading the article because those bar owners saying, first of all, you shut us down. right, without having really any facts showing that bars are an issue.
Yeah.
You know, and we can argue that all day long because people are in close proximity. It's like, how the hell are you not going to contaminate people? But whatever. Bars were shut down. All that happened. Then you have bars that found the loophole of they just have to
Well, they
sell.
didn't find the loophole. They lowered the bar for a restaurant because you had to, if you sold 51% of your revenue came from alcohol, you were a bar, and they lowered that all the way down to like 30%, and then they allowed you to take food trucks into that calculation.
Oh, and they were jacking up the prices of the food, but it's really you're paying for the alcohol just to show that they were making more of their revenue on the food.
It just shows that business owners, entrepreneurs, they'll find a way.
Exactly.
They're like, I see your law. Let's move this and do this. Like, hey, you buy a sandwich, you get a free beer. Just the sandwich costs you X number of dollars. I saw that in Austin. I went to there, and like in East Austin, there was a spot where you couldn't sell alcohol like in this certain zone. It was weird. But if you went and bought,
Austin is weird.
It was a brewery over there, but if you went to the brewery and you ordered or you bought a glassware, if you ordered a pint glass from them with their logo, you got to keep the pint glass. But with the pint glass came 4 wooden chips. Just so happens that those 4 wooden chips were redeemable for a beer in the glass that you just bought, and the glass cost you $20. So I was like,
what a quinky.
Wow, you get a free glass.
Right.
You pay $20 for this glass, and you get 4 beers. So it's $5 a beer. Like how that worked out, and they found the way, and they have a full-fledged brewery right there in this district where you're not allowed to sell alcohol, but they're not selling alcohol. They're selling glassware. Just with the glassware comes a chip for free beer.
Yeah, and I mean you have it's just that, right? It's entrepreneurs that are real entrepreneurs. They adjust, they adapt. I mean, when they first came out, it was pizzerias that we were looking at, and they were not giving away, but they were selling make your own pizza at home boxes.
Yeah.
Right? So they would sell you a box of like the dough, the sauce, the cheese, the condiments, whatever you wanted for one flat rate, and you can come by, you pick it up, and they had instructions on how to make it at home. So they were innovating. They were being smart about how to do it. A lot of them turned into carry out only, right?
Yeah.
A lot of bars adjusted, and they were like, yeah, we're still open. We're just takeout only. You take your drinks. You order a bunch, whatever mix, whatever you like, and you take it. Mirasol and Soluna here in San Antonio, they were doing by like the gallons, their margaritas and stuff
It's
like
not
that.
a margarita, it's a cheese bug. Get it right.
Yeah, whatever. They're all crap. But I don't like sugar drinks. But it was adapting. But some bar owners are still pissed because they opened up the bars, but they're saying that, you still have the 50% and all these other limitations. They're like, the issue that we have now is that we got to catch up to everything that was lost. And you're opening us up with literally both hands tied behind our backs. So it's like, yes, we're open now, but it's still not enough.
Yeah.
Like, and it's kind of what we talked about the restaurants in New York City and all that.
They come out and said like at 50%, it's like, I still can't sustain at 50%. No. Like it prolongs the pain. It keeps you going longer to maybe it's like, it's just that.
It's an illusion almost.
Can you hold on long enough to where the economy comes back? And I mean, it can move right into the next thing where they're trying to get these stimuluses back in there, or Trump offering to raise his bid to where he was at 1.6 and the Democrats are at 2.2 trillion, and he's saying I'll raise it to 1.8 trillion to try to get this gridlock. There's a lot of stuff like every day the past 2 weeks it's been flip-flopping where Trump was like, we're just going to call off until after the election, no stimulus till after the election. Then 2 days later, actually we're going to increase our bid to 1.8 trillion.
Yeah.
And the Democrats won't lower below 2.2. They're saying it doesn't go far enough. So what the actual sticking points are, I don't know. We can all read the headlines that they said it was the testing. And now the Republicans are coming out and saying that, all right, we're not going to hold this up over the testing or the language of the testing. And I saw something come across last night that Steve Mnuchin is now the Treasury Secretary saying, we have agreed on the language for their testing that they're wanting to do. So it's like, okay, so does this still go through then or not? Because who do you believe? No one knows, but they're saying that they're still wanting a bunch of money to bail out the poorly run municipalities and states.
Yeah.
That are like the more blue states, they want more money for them, but the red states don't need as much because their economies are moving along a little better, or they're more open. I don't know. But the thing is, the fiscally conservative you were talking about earlier about the Republicans, like, just because the president and the treasury agree doesn't mean the Republicans in the Senate agree. They come out and said, like, they wanted less than $1 trillion to begin with. And now they're saying, we're going to up. And now you have the White House agreeing with the Democrats and the Treasury. But if you can't get those 53 senators in the House or Senate to agree, this bill goes nowhere. But
I think this is a lot of weakness from Trump, where, stick to your guns if you really believe that's what's best for America.
Yeah.
But obviously, he said it a few times during that interview of the increasing the stimulus, where he says, go big or go home. Because he knows if he doesn't match the offer that the Democrats are offering people of the free money, free checks, free everything, he's not going to get elected. Because people are hurting right now. There's a lot of people hurting. There's a lot of people scared. And if somebody's coming around saying, hey, I got you, I'll take care of you, I'll give you the money you need, we'll race back to the $600 a week, even though I believe that is terrible for the country.
Especially $600 a week.
Yeah, that's terrible for the country. But regardless of that,
it's all political. You got to get those votes.
People want it. People need it. You know what I mean? And now Trump is bending, and he's going to up it from, at first I think it was $800 million that he was looking at. No, $800 billion.
That he was $800 million. That didn't go very far.
Small.
$800 million is a small amount of money.
But now he's saying, what he wants is Pelosi to remove all of these things that she's added into the bill that have nothing to do with stimulus.
Yeah.
Right? They're trying to make this stimulus bill so they can pass other policies and stuff.
Well, they were original was that like 3.4 trillion was their HEROES Act, and now they're all the way down to 2.2. But it's part of those negotiations where they shoot for the moon and they're like, okay, we'll give you this.
Yeah.
But I don't know. It's all you can't follow it anymore because every day something new comes out. Every hour something new comes out. Oh, they're not going to talk anymore. They're still so far away from the deal. They don't see it happening before the election. Then all of a sudden, actually, we're making some ground. Some things are coming through. So I don't know. You can spend all day and get nowhere following politics.
Well, I mean, one article that we kind of skipped over is actually the Senator Warren slams Disney for layoffs and executive salaries. So, Disneyland in California, because of the shutdown and everything, they had to close down. And I think what were they talking about? Like 30,000 employees?
Like 28,000 employees they laid off.
Insane.
And this just goes back to like where these senators are like all mad at companies. Like you bought back all this stock. You paid your executives so much money leading up to the pandemic, and now you're laying people off. I was like, well, for one, they're closing it because Disney World, located in Florida, is open. They're not laying anybody off in Disney World. Disneyland, California, is still completely shut down, and they said they're not opening them back up. That's what prompted them to lay off all the people. Like, we've been keeping them, even though they're furloughed, we've been maintaining, and she congratulated them saying, hey, thank you for keeping their benefits going for their health insurance and stuff like that. But now they're officially laying them off. It's like, they're 6 months into this thing. Like, they can't keep them on forever. It's like, you need to open back up. And that's where I was going back before of like, you can't judge what they're doing now versus what happened a year ago, because that was completely different from what happened a year ago. And then just flip-flopping back and forth to where even trailing into like the WHO coming out and now saying that lockdowns don't do lockdowns. They cause too much economic damage. It's like,
no,
what?
That makes
wow,
no
what a
sense.
way to flip flop and saying, oh, now don't shut down either. That causes more problems, but you still have people like, it's just the hypocrisy of it. It's like, oh, we need to follow the science. We need to follow all these experts. But now the experts don't follow their narrative, coming out saying, don't do the lockdowns, but they stay locked down. They're like, well, we don't know what kind of science they're following. It's Trump pressuring these people to open up. And like, oh my God, you change the narrative constantly.
Well, what was interesting is this week I had a doctor's appointment, and I'm talking to the doctor. We're both sitting in there. Masks weren't really on.
Weren't really on or weren't. I don't know how you could weren't really on them.
I'll leave it there.
You had a chin
I don't
diaper?
know. I don't know.
What was
I'll
it?
leave
I
it
think they
there.
called it a chin diaper.
But
I just kept it down
I was
there.
like, when is this whole mask thing going to be over? Like, you know, in the medical sense. And I'm saying more of when's it going to be, at what point are we just going to stop needing to wear masks and all that? He says, look, this is very simple. Viruses don't go away. You either create a vaccine or it needs to go through the population. He says the problem is that this whole pandemic was treated politically. It wasn't done through science. It wasn't done through what we know as doctors. He says the first shutdown, he's like, it made perfect sense because it was new. Nobody knew what the hell was going on, and it was spreading really, really fast. So they needed a shutdown to have some time to like stable off. That was done. We got a lot of data from that. We know who is at risk and who is not at risk, right? So he says what should have happened is the people at risk are protected. They stay home, they take proper measures, but the people that are not at risk of dying, of having any severe side effects to COVID, he says those people need to be going out and about because it needs to spread. It needs to go through the whole community. Because once it hits 65, 70% of the population, it stops spreading. Because once you've had it, it doesn't, supposedly, you don't get it again. They're like, you're not going to be getting this virus again, even though there's rumors everywhere that
there's 5 people around the world
supposedly
that have said that have confirmed they've gotten it twice.
Yeah.
It's like 5 people out of the 5 million that have
well,
gotten
and then it could have been, too, how we covered a while back, is that maybe the first test was wrong. Maybe they didn't have it the first time.
Yeah, they caught the flu the first time. Or they had the flu this time, and they're saying
it could be a lot of things. But what he's saying, he's like, so you have that route, which we obviously didn't take. Now we are closer to a vaccine, he says, which at this point, it's like you might as well just wait for the vaccine to come out. He's like, 'cause you don't want to be that, you know, he gave the analogy. He's like, you don't want to be that last troop that gets killed right before the war ends.
Yeah.
he's like, you know, you don't want to be that person. You don't want to risk it. So
it is just one of the things, like back to this article, that they said that the World Health Organization has warned leaders against relying on COVID-19 lockdowns to tackle outbreaks after previously saying countries should be careful how quickly they reopen. It just shows that the flip-flop, like everyone says, rely on the science. Like, the scientists don't know. It's a new thing that constantly changes, and that's what I hate how political this is becoming. It's that lockdowns just have one consequence that you must never, ever belittle, and that is making poor people an awful lot poorer. And that is what's happening with this like K-shaped recovery with the delinquencies, like we've talked about. I mean, all through this, like the last several weeks, we've been talking about this. Like that is what is happening with these lockdowns. The way like we need to shut it down. It's like small businesses that employ 75% of the country can't withstand these shutdowns, and then when the people get laid off, the business owners go bust, and that cause damage that is unimaginable, and where all this stuff is tied in, to where it gets annoying at times when everyone's like, oh, we need to shut it down, we need to listen to science and everything. Like, yeah, but even the scientists are now coming out, because scientists think on a science basis, not economically, and now they're realizing like, well, when people become poorer, science and health shows that suicides raise, alcoholism raises, malnutrition raises, food lines get longer. Like, now the science is coming back around to being like, yeah, there is that side effect. Where the people that thought about it economically first, science second, were like, they saw that coming. They're like, we can't shut down. Like, the stuff that is going to come from that, what's going to happen, all that stuff they said is coming true. To where that's where the political side of it, where it's like Democrats want to say rely on the science, Republicans want to say rely on the economic data, and now they're kind of coming back around to the very end of this whole ordeal.
It's kind of that thing that upsets me every time I hear a politician, and we have the one here in San Antonio, Nutterbugger, whatever the hell his name is.
You need to get his name right. It's Nuremberg.
No, screw him. But when he comes out and says, you know, losing one life isn't acceptable. Like, how ignorant are you? It's like you are going to lose one life. You know, the risk is still there. But what you got to look at is the overall thing. Stop trying to be so high and mighty with your thoughts, and you're pushing out all this ignorance of like, no, one life is acceptable if we're saving millions. Like, at some point, and I get it sounds terrible, and obviously nobody wants to hear it, but we need to talk the truth as well. Like, we can't be afraid of saying what it is. It's like, are people going to die? Yes. Some people are going to die, and it's going to suck. Nobody wants that to happen. Nobody wants you to lose your grandparents, your father, your mother, your friend. Nobody wants that. None of us do. But at the end of the day, you have to look at the overall world, and that's where politicians don't care for that because they're only worried about that next.
They got to capitalize it, or it's like it'd be very. No, we could never get there, but to see like what the actual study was of the harm of going both directions.
Yeah.
Just saying, like, all right, if we would have opened up and you'd gone this way, like what would it have done? What were the actual results of people that died? Not saying, no, they really had a lot of other issues, and they had stage 4 terminal cancer. And then they caught COVID, and then they died. It's like, well, they were already going to pass this, just this is what got them.
It.
And to where like you remove the politics, like what was the actual way to handle it, especially like the election year. Like if this wouldn't have been an election year, like how different would this have actually been? Because you have people like when Trump stopped travel from China, Democrats came in like, oh, you're a xenophobe, I think they call them. It's like, you're a racist, you're pushing out that specific organization, you're blaming them. It's like, because it was them, and he did shut it down. But now they're saying, oh, the way you mismanaged the pandemic, like, wait, you were criticizing him at first for trying to handle it, but now you're going back and saying the way he handled it isn't the right way, and now you're saying you would have shut it down sooner. Like God, come on. But they're trying to capitalize.
Politically, nobody's going to win.
No.
Because politically, I mean, they keep blaming each other. They keep putting blame and everything, and yet this is what we keep saying is that while these people are pushing blame and doing their whole game, we're the ones being affected.
Yeah.
We're the ones.
Well, that's
that
where
you
started seeing more and more people being like, even in the politicians, like even the Democratic side, just coming out and saying like, Pelosi, take the damn deal. Yeah. Like, we need to quit screwing around with all this stuff and putting such a hard nose thing. Like, people need help. But it's like they're still trying to play the politics with it. But that is their job, is to play politics, because they have to stay in power.
Angie Francis says, what did I just walk into? Politics?
Nope, we'll change it now. So real estate,
yes.
Brokerage and stuff like that.
Brokerages are awesome.
Yeah.
But yeah, I mean, yes, Angie, we're talking a little politics because it affects the business. And it is something that you and I were talking about it yesterday as we were kind of going over what we were going to be speaking about in today's episode. And it was just, I'm tired of the politics, right?
Yeah.
But it affects the way we operate business, and you need to be aware of it because it's going to affect the way you're going to keep operating.
You can't ignore it. Like, if you're a business owner, you have to pay attention to some form of politics and what is happening in a national level, state level, local level, and your specific business. Like, it's all connected to where if you stick your head in the sand and something comes along and changes, like, well, where'd that come from? You need to be able to prepare yourself of what is coming and currently. I mean, just like the market report, like, you can't be a business owner and just say, I'm just going to do my one thing. Like, you need to be able to understand your surroundings and see what's coming off in the future, because I don't feel bad for you if you don't pay attention at all and something comes along and swipes this thing away and you're like, where'd my business go? It's like,
and I mean,
well, it was kind of coming.
And and if you haven't already, the link will be below of this month's market update. You got to look at it. You got to understand, what is the market doing? How are the prices moving? And actually, next week, we're going to be posting an episode that we recorded at one of the properties because we were paying attention to the data, and we made nearly 40 grand in about a week flipping a house. And we didn't use the normal strategies we normally use because we looked at the data, we looked at what it was, and we saw we can generate more income by doing a different strategy.
It's like it would take less risk and generate the same amount of money.
So that episode is going to be going live, believe like Tuesday night or Wednesday. So make sure, again, subscribe so you don't miss it. Hit that little bell button. That way it gives you notifications when new episodes are posted.
Hit the like button. Hit the like button. There's 15 people watching and only 6 likes.
I'm muting John's mic, so don't worry. But yeah, I mean, it's one of those things that, like, pay attention, understand what it is. And here's one of the companies that is actually doing precisely that. We have Zoom that will start letting people host online events with paid admissions. So this is big. This is really big because up until now, we've actually we're going to be putting together workshops and stuff like that on strategies. We're going to be breaking down a lot of things because what we've been seeing a lot in the market is terrible workshops, terrible education of things that just don't work. Or you spend 2 hours in a workshop and you finish and you're like, what the hell did they just say? Like, what's the purpose? So no real education is being put out. So we wanted to start putting out workshops. But when we started seeing like what platforms to use, my God, like you got to be half a nerd to be able to link all these platforms together. So you
spend
can
an entire day trying to get it to link together.
Just so you can be able to like put a damn workshop together. So Zoom doing this is genius because they are one of the biggest platforms.
Also, one of those things like, how did you not have that beforehand?
Well,
come on. But you did look at what happened to them this year. They were like, holy shit.
Well, and they've been killing it.
Well, it's like the number one go-to platform now that, I mean, before this, I had never even really heard of Zoom. Like, if I did, it was just kind of like, and just passing. But I wasn't using Zoom, but now their stock price is up 600% this year alone, and they have some like 300 million daily call participants. Like, that's a lot. We only have 330 million people in the entire United States, and you're saying 300 million daily active users?
Oh, it's insane.
Like that's because like all the school systems, like their infrastructure that they just had to boost up, like that was insane. Like it's great for Zoom, but my God, how stressful the last 6 months must have been, like for coders and the people that are having to build the code to withstand that kind of infrastructure. Like, whew.
Well, and I mean it's. Damn, the wind is strong. It goes to show though, like when you have a real business owner that's paying attention, how they pivot. Zoom has been killing it.
Yeah.
Right. You would think like a lot of other companies, they're killing it. Well, just sit back, enjoy this ride.
Yeah.
No, they're like, all right, what's next? What's the next thing people are needing? How can we improve? How can we make this better? And Zoom has been improving every step of the way. I mean, I'm always following Zoom because I'm always on Zoom calls. So I'm seeing all the stuff. And you have not just Zoom, but you also have like iPhone has been, well, not iPhone themselves, but they've created apps now that you can use your iPhone as a webcam. So if you have a shitty webcam or you don't have a webcam, but you have a phone, and I'm saying iPhone, but I'm sure Android is copying them. I mean, come out with something similar. Just a little bash at Android people. But you can use your phone as webcams, right? And what's the purpose? Is so you can integrate it with Zoom. So now your calls are better quality. Yeah. You can use different filters. You can all these other things that they're doing on Zoom and platforms and then apps. They're adapting.
Yeah.
They're providing you with the tools, with the resources to make better use of what you have available. And we go back to true capitalism, true entrepreneurism. And that's what it is. It's figuring out, instead of sitting there and whining about how terrible everything is, you adapt, you pivot, you make.
Well, we had somebody comment that said Zoom is slowly becoming a platform for access to all manner of real estate information. I don't think it's just real estate information. I think it's all information that, school systems. Like, I haven't heard of a single school system that is opening back up that isn't using Zoom.
Yeah.
That is trying to do digital online classes and stuff like that. Now, what's going to happen is, and I think they're using this money and stuff that they just raised their success to make sure they're pivoting their platform like you're talking about, because as people go back to in school, because I think I'd venture to say that at least half of those 300 million are school systems using them to educate kids. Mm-hmm. Well, they're not going to continue to do that forever. Like, in school is far superior to doing it via a classroom.
Kids are not engaged.
As those things continue to fall off, they need to be able to replace that income with something new, because there are platforms out there that do allow people to pay to attend classes, and they're trying to go after that market share to where, I think I put it in this article, some of the other competitors that they have, they are allowing charging and stuff like that. But now Zoom is integrating it because they need to pivot, because they saw the growth, and they got a huge market share. They need to make sure they maintain that market share.
And that's really it. They got this. They got the momentum going, right? Zoom is like the leader right now, where other platforms can come out with the same or better features. But as long as Zoom doesn't necessarily need to be innovating above them, as long as Zoom implements it along everybody else, they still stay superior, because it's like everything. Like, we always talk about Android and iPhones, right? How
Yeah.
Android has a lot of stuff that then iPhone comes out with. iPhone still has a large market share. I don't know if it's larger than Android worldwide, but in the US it is pretty big. So iPhone doesn't need to necessarily innovate. They need to see what Android did. Did it work? Did it not work? What's the response? And then they implement it in the platform, and they keep all their users happy.
Yeah.
That's all it is. And Zoom needs to do the same thing. And this is something where I think a lot of RIAs have missed the boat on, is a lot of guru-led RIAs went out. Like, they didn't even try anymore. As soon as networking shut down and they couldn't keep scamming people into their courses, they shut down. And then you have the other RIAs or networking groups that have stayed available, and they've been doing like Zoom events. They're missing a huge opportunity because the biggest thing that's missing is the networking aspect.
Yeah.
Right. And this is something that part of one of the masterminds that I'm part of is you join the mastermind and you have the person give a spiel, whatever it is, for 30, 45 minutes. And then you could have maybe 100 people or 30 people in the group. They'll break them out into little groups, into little breakout rooms of 4 to 5 people each one. So now you have real networking going on in those groups. So you can attend and have actual networking.
Yeah.
Which is the value of these events anyway. It's the networking. Like, not many people really go to the RIAs for the education that's being provided. They go for the networking that's available.
Yeah, as you become more successful and learn more, it's like, I still go to RIAs, but I go there to network. I don't go for the education, but it does bring in people for the education as well. 100%. As like, it's a kind of a melting pot of everything.
You can do both. But my biggest thing is that where Zoom, I think, has a leg up over traditional networking is that traditional networking, when you're in one of these places, sometimes you see the people you want to talk to, but you're kind of scared of approaching them, or maybe they're surrounded by a bunch of other people. But in these breakout rooms, you're kind of put into the room with this person now.
Well, it's good for your newbie over your experienced person. Like me being experienced, like, I don't want to be stuck in a big room. I want to have the whole room to just visually see everybody. I'm going to talk to that person, to where you kind of get stuck. But you still do go, because right now that's the only thing you got. It's like more and more people are watching. More and more eyes are going digital, for sure. And I mean, you can kind of trail this into more people watching of like podcasts and where they're getting their entertainment and how they're absorbing information, to where you have Joe Rogan. Obviously, we've talked about in the past, he left. It's the number one podcast, millions and millions of views in on his YouTube channel for the Joe Rogan Experience, and he left California, moved to Texas. And what's just crazy, like the amount of wealth that he's created via that, is like he just struck a 5-year deal with Spotify, and it's rumored to be about $100 million.
A year for the 5 years? For the
5 years. It's like $100 million for 5 years. But what did he do with that money, which I thought was crazy, is he just recently listed his Bell Canyon estate in California for $3.2 million. And I said, like, well, how do you go and spend $100 million? It's like, Joe Rogan has relocated to Austin, Texas, in a mansion on the lake for $14.4 million. Jeez. That blew me away. I was like, $14 million? Like, holy crap, you can buy one hell of a house in Texas for $14 million. Yeah. And I think it was like, it's 10,890 square feet. The estate features 10 bedrooms, 10 bathrooms, and enough space to make his wish list of a ranch, comedy club, performance auditorium, and gun range a reality. Now, if that's not an upgrade, I don't know what is. To where he goes from $3.2 million in California, where he had a beach view, but now he's got a lake view for $14 million, 10,000 square foot house. It's like, good for you, Joe Rogan. Good for you. But he's one of the first to YouTube that kind of really made this after 10 years, 15 years of doing these podcasts. Like, he's made quite a business out of it, because he does get a lot of eyeballs and he does get a lot of interesting people, where I don't watch very many of Joe Rogan's, but every now and then I do catch an episode. And I am going to be sad to see him go to Spotify and leave YouTube. But
especially with Spotify trying to control him and limit what he can express and say. I think if either Spotify doesn't smarten up or Joe Rogan doesn't leave, it's going to kill. I think it's going to hurt his brand substantially.
Well, because they're starting to screen him, and that was one thing that made Joe Rogan, is like, he said what he wanted to say, and that was that. But now he's sold out to where they're like, oh, well, employees are like, we're going to go on strike unless you censor Joe Rogan. Yeah. Like, well, that sucks. But it's probably one of the things that they saw that coming, and it was probably in the talks of how this works, where he'll probably still record them. They just won't be live, and they'll be released later on. Because I don't see him. Obviously, he's not going anywhere in 5 years.
This gives a great avenue, though, if that happens and Joe Rogan does go through Spotify and you won't be able to see his stuff on YouTube anymore. YouTube being the second largest search engine in the world, it opens up the field to a lot more people now. Not the whole world is not on freaking Spotify, right? I don't have Spotify, so Joe Rogan being there, it's like, well, there you go. I'm not gonna go into a stupid platform that likes to control everybody.
Yeah.
I like YouTube, so I'm not watching Joe Rogan anymore.
Oh, right? I don't watch I don't use I have Spotify, but I use it for music. I don't use it for podcasts. I don't use it for stuff. But I think that's what they're trying to do, is they're trying to expand their podcast platform, and they're trying to bring these people on to bring more market share by paying exuberant quote unquote exuberant amounts of money to somebody to bring it over. But then what came out right shortly after was the Howard Stern aspect of it, to where I didn't even know Howard Stern was still that popular. Well, that's true. I don't really know if he's still alive or not, something like that. But I remember seeing some of his stuff way back, 10, 15,
Molly,
20 years ago.
If you don't have Spotify, according to John, you're a loser too. So
she is.
According to him, anybody that doesn't sell out.
Where I would just blew me away when I saw this, that I thought it was a typo. Mm-hmm. That Howard Stern, and this what caught my eye. It was like, oh, headline reader, what is this thing? Like, his salary's $90 million a year. I was like, get out of here. $90 million a year for Howard Stern? Like, what is that dude doing that is worth that much value anymore? They call him the king of media. I start reading into this thing. It's like, yeah, his salary was not only $90 million a year, but he's renegotiating his contract, and they're saying that he is actually underpaid on Sirius, because apparently he has an exclusive contract with Sirius XM Radio.
Right.
To where they're now making a case that he's worth $120 million a year. That's not over a period of time. That's a year. To where I was like, man, a lot of people be really excited to make $500,000 in a year. This dude is making $2 million a week.
Yep.
Over $2 million a week. Towards jaw dropping.
He's damn near an athlete. These people are being paid like athletes.
Dude, he's making more than athletes. Yeah. Usually athletes only make 120 over 4 years or something. I would be curious to look that up, to where, we need one of those Kai from Petra.
Yeah,
hey, look that stat up real quick for me. To the highest paid athlete in 1 year. I'd be shocked if, I wouldn't be surprised if he's paid more than the highest paid athlete in 1 year. To where,
I think back a year or so ago, the highest paid, or before he retired, was Floyd Mayweather. He was making just under $100 million a year with 2 fights a year. He would make just under $100 million. And then you had, I think, soccer players like Ronaldo and all those people.
I looked it up right now, and the top is Roger Federer.
Federer. Yeah, he's a tennis player.
Oh, he's a tennis player?
One of the best.
Yeah, here's the top 10 highest paid athletes list this year, and Messi's number 3. LeBron James is still only number 5. So,
really, even after helping LA win the title?
That's 2020.
I heard Molly's excited that
it doesn't list their salaries, but those are the top 10 athletes.
Yeah.
So I'd be curious to know what.
No, but it's to your point. Sirius XM, who the hell still listens to Sirius XM?
Oh, could you pull it up, the stock price of Sirius XM? They put on here who watches Sirius XM that this guy is worth 100? Is it just Howard Stern? Yeah. I know it's not. How much money does this company make that can afford this?
Yeah, what was it? In the late 90s, it was trading at the 50s all the way up to almost $60 a share, and now it's $5.
$5 a share to work, and it's
how is he worth it?
Yeah, how is he worth it, or how are they generating that much money off of him? Because you would think in business sense, if they're going to pay him $120 million a year, they're making $250, $300 million off of him a year. What? well, who listens to Sirius XM or like just the Howard Stern one show? Because like you think back in like 2007 or the early 2000s, 2005, 6, 7, 8, 9, it was cool to have Sirius XM. I remember getting Sirius XM. You're like, sweet, I don't have to listen to ads. It was
had a comedy channel. It
dude,
was awesome.
I had this little antenna that I stuck to my car. I had a little thing that's it went to, and then I had a tape disc that shoved in to play it over the car radio, and like that was actually really cool. And then when the cars came preloaded with that, you're like, oh damn, this is before Bluetooth. You're like, it's got Sirius XM, and I got to pay an extra $50 a month for this thing, but it's worth it. I got to choose what I want to listen to. But now my truck is a 2010. It has Sirius XM, and like, oh, do you want the package? Like, no, I don't want the package. Like, I've never even set a preset in my last 3 vehicles. Like, why am I going to pay for this? To where that many people still watch Howard Stern and Sirius XM radio, that they can get 120 million a year, to where I saw Joe Rogan for 100 million for 5 years. I'm like, man, good for him. Then Howard Stern comes out like, Joe, you got screwed.
Well, I mean, Howard Stern, I think, has a lot more. He's more of an OG than Rogan is.
Yeah.
You know what I mean?
Yeah.
So it would.
Well, he was also on, what was it? Wasn't he on like America's Got Talent or something like that too? He did a lot of TV stuff as well.
Yeah, but I mean, it's one of those things with Rogan that with Howard Stern and everything, is that this is setting that level. It's the same, like I used to watch a lot of soccer, right? And you have players every time there's a new ceiling set.
Yeah.
Pretty much. Well, no, a new floor set every time a player gets traded. So now with Howard Stern making, $120 million a year or whatever he's getting paid now, like, you just set a new floor for a lot of people. If in a year Joe Rogan boosts up the viewership, the listenership to Spotify, I bet you he'll renegotiate his contract in a year.
It's that business decision. It's like, hey, I get I'm breaching the contract, but it's more worth me to fight you to get out of this contract because
you're going to lose more.
The money's there.
Yeah.
To where it's like, dude, I'm worth $500 million
and then
somewhere.
Even for Spotify, even though they're stupid to let their employees dictate, that, I'm going to go on strike if Joe doesn't take it back. It's like, peace. I have plenty of people looking for jobs right now. But anyway, regardless of that, you have Spotify. It's going to be to a point where it's going to make sense. Joe's going to be like, look how much revenue I brought in. And that was, you were basing my salary off of this level of revenue. Now I brought this level of revenue. I'm worth more. Spotify would be stupid not to want to renegotiate and be like, done, here it is, because he's bringing you the people.
Well,
it's
showing the shifting of times of where these things are going. It's going more digital. It's going more podcasts. It's going more platform based, to where radio anymore, where somebody like says, oh, I want to go do a radio ad for real estate. It's like, don't. Like, it's because it's still extremely expensive, because they're still with the 20th century mentality that they have value. But it's like, they have value, and it's just slowly going down to where they're going to need to adapt.
Oh, we have Milton on here that he says, my lady and I listen to the 60s on 6, I guess Channel 6 on Sirius all day.
Well, my parents, like, they still listen. I think they still have some Sirius XM and listen to some stuff there too.
AM radio?
But hey, obviously they're making money somewhere. It was just something that Howard Stern hadn't heard of him in a long time. Sirius XM radio, barely heard of it. And now I read this article that this dude's making $120 million a year off of Sirius XM, and I thought I misread it. Like, wait, $120 million a year? Yeah. Not over 5 years? Typo? Nope. No. He's crushing it.
It's insane.
Good for him, though. Good for him. That's why we're doing these podcasts. We're trying to take, if I can get like 1% of that, I'd be happy.
1%. Man, we're better than Howard Stern. Right, people? Thumbs up? Better?
Yeah, like us, please. Share.
We need validation. So as we start wrapping up, we have 2 remaining articles, but let's pick one. We have
the voting one.
Voting.
Yeah, I just thought that was crazy, just from your experience from Tuesday when it opened up, and to what I experienced yesterday when I went and voted, to where like how this is all going. Yeah. And it was just the sheer numbers that is what's got me, because all these polls are coming out trying to predict the elections and all this other stuff. But you got to ask, like, how accurate are these things? To where, by comparison, on October 16th of 2016, presidential elections only had about 1.4 million votes. Voters had cast a ballot. So only 1.6 million by October 16th. October 16th of 2020, more than 10.6 million voters across the country had already cast their ballots as of Tuesday morning, according to the data from the U.S. Election Project. To where it's like,
this is early voting.
Early voting.
It's
Early
insane.
voting. We're here in Texas.
Just opened up.
It opened Tuesday. It's Friday. To where you go ahead and explain what you saw
Well, yeah.
Tuesday morning.
I mean, we have a library by my house, and I wanted to do some early voting as well because I don't like lines at all. I hate holiday shopping because of that, because it's like I see lines and I just want to punch somebody.
If there's two people in line at Dunkin' Donuts, you
already said it. Two people in line. There's a line. It's not acceptable.
I can't walk up and get it right now. If I get Amazon deliver my coffee,
I've paid for all the premium passes and every attraction place because I want to bypass the line. I will pay extra for that.
I won't go to save money, so when I do go, I can pay that money to get the express
whatever
pass.
it is, I want express pass. And then when I'm in the express pass and I see a line, I go to the next ride. I don't like lines. That being said, I'm pulling past the library and I see a line kind of out the door, and I was like, oh, wow, that's, it's like 20 people or so. I was like, damn, I didn't expect there to be a line. No, it wasn't 20
just a
people.
Line.
That was just part of the line that was already feeding through that door, but the line was wrapping around the parking lot in between where the car lanes were, because the parking lot was packed. There was wrapping around that way, wrapped around the little playground area. It came across. I mean, there had to have been at least a couple hundred people, and there were more people parking in the neighborhoods
and then walking
there. I was like, oh my God.
It cracks me up because they said people were waiting in line for, I think this article said, over 11 hours for in-person voting. Yeah. It was like, people, this isn't Black Friday. We're all rushing to get that big screen TV from Walmart. Like, the polls aren't going away. To the way I do it is I found the local polling station and I drove by it. If the line was too long, I just kept on driving.
Right.
And go by twice a day, and I would just do it. And then yesterday morning, I happened to drive by, and the line only had maybe 20 people in it. I was like, all right, I'm going to knock this out right now. Bring my book. I'm going to read. Took me 20 minutes, in and out. By the time I walked out.
You're standing online reading a book?
Yeah, just standing in line, just reading a book.
What a nerd.
Oh, screw me for trying to educate myself while I'm standing around. But by the time I left, it had wrapped around the building and the line had doubled. But it's just funny where it's like people are looking at this like, oh my God, I got to cast my ballot before the polls don't let me go cast my ballot. Like here in Texas, it's open for like 16 days or something like that. Like, wait it out. So I'm curious, like, if these lines continue that long all the way through. But I mean, now I don't care because I caught the break. I figured it was going to be that way, where this line's going to continue to be long. And if it gets down to the very end of early voting, I just have to suck it up and go stand in line. But I caught a break.
Not vote.
Or not vote. That's terrible, John. You got.
This
is the first year you get a vote.
Hey,
you have to go vote.
I still don't like lines.
Hate it that much.
Molly she's like, you will hate Disneyland. Well, first of all, I went to Disney World. I will not go to Disneyland.
It will not be the happiest place on earth for you.
And when I went, I did get the fast pass and all that there.
He'd come back.
It was still miserable.
He would come back with less hair than he's got right now.
Yeah, I mean, it's just, it's one of those
hilarious.
things that I probably won't vote if it keeps that way. So if you guys want me to vote, hold the spot online for me.
Well, that's it. Valeria says they're even open on Sunday. And I think this week they're open until 6 p.m. Like next week they're open until 8, and then they could keep extending it. Like there's gonna be plenty of time, people.
It's impressive but to even consider like the amount of turnout, it's already happening.
We're 10 times.
People are really coming out, and saying, like, we have an opinion that it needs to be heard now, and they're not taking shit for granted anymore. They're not thinking that just because, let's say, Texas is a red state, it's going to stay red.
Yeah.
Or just because Texas is a red state, it doesn't mean they can't make it blue. I mean, well, we're not a red state anymore. We're, I guess, purple. I guess it's the in between.
It depends on what you look at.
Well, I'm saying just the facts, but like
2018, it was still red.
no, just facts.
No,
To
that's
quote
opinions.
to quote Mike Pence, that I thought best line. I'm sure.
Yeah, I'm using that the rest of my life.
But he said, you're entitled to
entitled.
your own opinion, but not to your own facts.
Yeah.
As soon as I heard that, I was like, that is definitely something John needs to wear.
I dropped that on him yesterday.
Because
pretty much
he
every day
has
I use that on
opinions
him.
all the time that he considers to be facts.
Mhm.
So
It's weird how your name's John too. Quit talking about yourself. But
Right.
back to this where it just blew me away. That it's like, wow, 10 times have already come out and voted.
insane.
But it's no surprise that we're having this turnout considering like everybody's been stuck at home in the election. Like, what are you supposed to do?
is
Like
it the only time to socialize, you mean?
you can't like get away from it. Like I was talking with one of our friends the other day of like, you can't say you didn't know the elections were coming. I mean, you can't use a digital platform, an app, a phone, like anywhere. You go on Google. It's like they've made it so easy to register. Like if you didn't go out and register and vote, it's like you just didn't want to do it. Like you made a distinct statement that says I'm not going to do it because it was literally everywhere.
Well, you
And
can't
it's
open up
easy to
any
do.
social platform without getting that
No.
little banner at the top. Did you register? Go
Go
to
here.
register.
Go
Here to
here.
register.
Go here.
Everywhere.
And like, so it doesn't surprise me. But then that's why everyone says, "Oh, look at the
I
polls."
tried to mark it as spam. It won't let me.
because you thought, "Oh, they're telling me to go stand in a line." Not
Yeah,
gonna do
screw
it.
that shit. I'm mailing in my vote too. No.
No, hey, it's up to you. You could claim psychological issues with.
Yeah, I'm traumatized by the lines. And oh no, wait, we got to use COVID as an excuse.
Yeah. You could probably
Idiots.
get. You could probably get
But-
a psychological note from your doctor saying that you got
So,
mental issues.
I can get a lot of those notes. But there you have it, people. I mean, I hope you guys enjoyed today's episode. A lot of things going on. Like, if you didn't catch the beginning, make sure to go back. There's some good marketing tips in there for what's coming with the delinquencies, possible foreclosure. Short sales are definitely going to be the way to go if that happens.
So Angie, be ready.
Angie and Stepstone Realty. Make sure to check them out. That's a brokerage that John has his license under. They handle short sales and all that. We love the brokerage because they're investor focused. I mean, all their agents are investors. So great brokerage to be a part of. That's a little plug. So I'll expect my commission check. And but it definitely just all the links are going to be uploaded as soon as this live is over. And if you're listening on podcast, guys, you want to attend live, join the conversation. Give us your feedback, your opinions, how everything is going, because we like having these conversations. We like knowing what you guys are thinking. This is always our opinions on the news, but we're trying to bring you what we consider to be somewhat unbiased as much as we can be. But we are very biased in the sense that we like business. We like our freedoms. As a business, I like to be left alone to operate my business. So, it is biased in that regard. But overall,
It's our opinions towards our business and what we like and see coming.
Yeah, we want the best thing for this. Angie says she's so ready.
Brokerage loves y'all, and your check's in the mail. I promise. Don't trust the mail. I don't mail checks anymore because they've just tend to disappear.
Especially from like Austin to San Antonio, it takes like 3 weeks.
Yeah.
You can
Or
walk it over
never.
quicker. But yes, subscribe, sign up, share with friends. If you found this valuable, share it with your friends. Let them know about what we do, and hopefully this just helps everybody be a little more informed moving forward and a little less
Agreed.
pessimistic and angry towards everybody. I mean, there's always a silver lining to everything, but we got to take that silver lining ourselves. You can't expect the politicians to bring this to you. So if we do this, we affect the change that we want. So
Can't we all just get along?
no, I want a little turmoil, but not that much.
Well, I was
Keep it
thinking
fun.
Get along so you can go stand in the line.
No, stop it with the lines. Thank you all for watching, and we will catch you on the next one.
Bye-bye.